Good morning. Good morning. Good Friday morning, World HD, live on Rumble, X, and YouTube every weekday morning, 8 a.m. Eastern Time. Today is Commodity Friday. We are on day 10 of the government shutdown and a mixed week this week. So, stocks up 2 days this week, stocks down 2 days. We'll see what today brings. Started off Monday with a pretty strong move up. Tuesday, down day. Wednesday, back up again. Thursday, uh, pretty much a down day, sideways to down. Actually, pretty much a down day. We'll take a look at that again. Still hanging around that trend channel. I want to show you this today. It's kind of interesting. We do that trend channel and then it got blown out. But then yesterday it came down and toyed with it multiple times. So this, again, is this gamesmanship? Is there something going on here? Remember, we have the deep overvalued on the stocks, daily, weekly, monthly. We'll take a look, get an update today at the end of the day, and then update the dailies. So we'll get the update on the weekly and update on the dailies. We'll see if any of this dailies burned off, see if any of the weeklies burned off. I doubt any of the weeklies burned off. I have a feeling we'll come back with a positive print. I don't know what the number is, but it's going to be hard to knock that thing out of an overvalued status. And but the dailies will probably burn off. There's been enough sideways trade here and a little bit of down action that maybe the dailies will burn off. So the key is now we're cascading over, right, on the stocks. Dailies overvalued, see if the weeklies pick up, and maybe next week we get some follow through on this downside. And that's why I want to look at this upward sloping trend channel that I thought might hold the other day. Then it got blown through. But then yesterday it comes back in and it's actually kind of a magnet, right? We'll take a look at that here in a minute. All right, let's see, what else did I want to say here on the opening? So a lot of, when you look through when you listen to the output, right, the people coming through on Bloomberg or CNBC or, analysts talking on the news wires, people have tried to get, the talk is people have tried to get out of tech a few times, with the idea that it's getting a little overdone. And, the AI, the tech, the hyperscalers, the big tech group. And every time, it sort of comes back through. This is a trend, right? This is, this goes back to, no matter, you read any of the market legends and they talk about this, where you get into, back in the days of the railroads, right? And we're talking about, I bring this name up from time to time, W.D. Gann, and, there's another big trader back then, Bear, and I'm trying to think of Baruch. Anyway, a fair amount of traders back in that day, and they learn to, the lesson learned out of that is to sit on your hands and just let the trend ride. Now, that was back then, and, we always say, well, it's different now, right? It's always different now. And so does it make more sense to, I think there's a couple things that have changed. The speed at which data flows, the speed of trade, right? The technology around trading, and the globalness, right? The global nature. Back then, I don't think we were, granted, there were wars and we did have a global presence. It wasn't like different countries didn't reach out and touch each other, but not at the speed that it is now, not the connectivity that's there today. So I do think some things have changed, and to sit on your hands, there is something to that. If people have long positions in the tech space, you get times like April, the trade war, Liberation Day back in April. You get periods of time like that, and you have to question, boy, do we take this off? What do we do? The ideal thing is to lighten the load a little bit, not get rid of it. Then when you get that pullback, you can come in against the moving average where the risk is low. You come back in. It's not always easy to do, right? You have to remember, we were talking about that level in the NASDAQ back then, this 19,232, where there was a full downside harmonic structure. Now we're at what, 25,000 or something? So, 6,000 point move since that April low. And those are the times where you kind of have to come in and but the moves are so crazy. We were pretty good about, talking about the, that was a good spot to come in and nibble, right? Back in that mid to late April timeframe, when the full downside objective looked like it was going to hold at that 19,232 in the NASDAQ. And it wasn't a surprise to see a come back up. But then we start looking at that July timeframe we were talking about. You're looking at July, and then you're thinking, okay, let's see if this market can bounce, see if it can go sideways, as these tariffs get rolled out and there's some resolution on the tariffs. But then to see this thing just blow to new highs like this, we did get another harmonic structure that pushed it, that 24,165 in the NASDAQ. And again, this is where you can't make mistakes. The September contract wasn't getting there, but the December did. And as an analyst reading these harmonics, I didn't think far enough ahead. There's so much going on. I didn't think far enough ahead in August, September to be watching that December contract. And then now it'll be on my mind, and it won't matter for the next 2 or 3 years or 4 years. And then all of a sudden you'll forget about it again. And then, but there's no room for error on this stuff if you're really trying to be good about, leaning on these harmonic structures. So that being said, the stocks are wobbling a little bit this week. Can they pull back? Look at all that overvalued, right? We've looked at that a couple times this week. The deep overvalued. We're seeing a little bit of signs of them wobbling. We're seeing them come back to that trend channel and play around with it. I've had a couple decent sized positions on this week on the short side in the stocks. And it's, if you're not taking profits, then it's not going to work, right? So again, if we're going to go short this and we're going to look at the short side of this, and that's why I'm doing it more than anything, or at least why I talk about this in here is, hopefully people can benefit from me testing the waters and trading this stuff, and I can bring that. That's really the value that I bring, right? The harmonics and trying to interpret that, but more importantly, watching the trade, watching what's going on, and then getting a feel for, is there something happening up here, right? Are they trying to distribute some positions for a potential pullback? So we want to go into that, right? And talk about this on the inflation front. So we might as well just hit this economic data. Let's just jump onto this right away, get into this, and I think we're good. Let me do that. Okay. Wonder if this thing's working again today. It's not working again. Okay, well, we'll just do it manually. All right, here we go. Let me get rid of this. Okay. All right. Something else to fix. Okay, again, this week was a lot about Fed speak and a lot about central bankers speak around the world. That's the real takeaway. We had Jerome Powell talking yesterday. Didn't really have much of an impact on the markets. Nonstop Federal Reserve speak. And so again, what are we looking at on this? We're looking at inflation. And where are we on the inflation front? The Fed's target is 2%. They're not able to achieve that. They're 3 to 3.5%. And I want to get into the story today on Levi Strauss, right? Levi Strauss had to raise prices. There's a fair amount of import. You would think, why are we importing things for Levi Strauss, right? You would think it's an American company. But the point is, you've got raw goods, so forth. And I don't even know where it's manufactured. I need to do more research on this. But what I saw in the headline this morning was Levi Strauss raising prices, okay? And so the stock took a hit. And I guess we'll get to that in a second. Because I've got that as one of our headlines. Is inflation going to come through in 2026? Okay. Are companies holding it off? No one wants to be the first. No one wants to take the hit. Nobody ever wants to take the hit. So what do? They sort of delay this. And are they delaying? Are they eating up any cost increases, right, that are coming through from these tariffs? Are they absorbing it? And that's one of our big questions. If they're absorbing it, at some point they can't absorb it. And then what they seem to wait for is somebody inches up a little bit in prices, and then somebody else inches up, and somebody else inches up, and somebody else inches up, right? That way no one really has to stick their head out, take the big hit. Because again, you have to remember, these people that run these companies, they don't want their stock options getting whacked, right? They've got target dates where they're going to get paid. They don't. A lot of times these people get paid a pretty sizable salary, right? Probably more than what they should. But nonetheless, then they get these huge stock option packages, right? So they're looking at these target dates, and they never really they'd love to see their stock just kind of inch higher, or trying to guide toward these payout dates. So sometimes people want to wait till that year end or something where they hit that boundary, these managers, that way they can lock in their gains. And so they might put off the fact that they have to raise prices, but they don't want to be the first ones and have to take the hit. So again, the there's a herd mentality here, right? You're sort of protected by the herd. If you stick your neck out and say, yeah, we're going to raise prices, well, you're probably going to be the one that takes the hit. You're going to take the hit on your stock options, right? You're really not being a hero. There's no reward in it, right? The system doesn't reward the honesty. It kind of rewards kicking the can down the road. Okay. And so that's the thing. So they're just trying to kick the can down the road on these potential inflation pressures that are coming from overseas goods. Now, President Trump, Scott Bessent, Howard Lutnick have said over and over again that these tariffs should not be inflationary for the U.S. But it doesn't make a lot of sense if you think about it, right? At some point, these costs, someone's going to have to eat these costs. Is it the other countries? Is it our corporations? Is it our consumer, ultimately, right, that it's going to trickle over to? Okay, and one of the other headlines is that, we're on this shutdown and the data is not coming through, but I saw a headline where the CPI data, they want the CPI data to be calculated. So somehow they're going to bring back enough staff to get the CPI data, the Consumer Price Index, calculated for the middle of the month, which is next week. So that's going to be interesting to see how they navigate that, right? Certain things, certain things are, it's crazy, right? I think today you're going to see things are pretty crazy. We got some good things to cover today, some pretty fascinating things. So that's a takeaway. I think the Federal Reserve speak, dealing with the inflation. Is the inflation coming through? The jobs, we may have just crossed a point in time where jobs will never be the same as what they've ever been, right? The BLS, we tried to bring in a new BLS guy, E.J. Antoni. That didn't work out. Now they're on hold. They're not going to get a new BLS jobs, Bureau of Labor Statistics, someone to head that up for a while, because obviously you can't even appoint them. You can't get them approved because we're on a government shutdown. So will the jobs data ever be the same? Because if we're about to cross this point in time where some of these jobs are going to go away, two things. We've got, we're exporting illegal migrants. So that's going to be a big hit on the jobs data. Okay. One way or another. Now, if you're actually, this gets crazy. If you're actually taking people who don't show up on the system out, then you might get a bump in some jobs, because we're actually filling some of those jobs with people who do report in the system, who actually do show up as a statistic. So the jobs number could get very crazy, but I think what we're seeing is this transition to jobs being replaced by this artificial intelligence. And the robotics is coming. We know that that's coming, and more automation is coming. Okay, I'm afraid that because we're not getting this trickled out to us, that there's going to be an event, okay, that happens. And hang on to that thought, because I want to go through this, this digital ID and talk about this, because if they're setting something up, some kind of a false flag again, then we're seeing some signs of this with this digital ID, okay, in this coordinated effort around the country, around the world, right? 17 countries, okay, have fallen to this digital ID in the past 90 days. And it's a very coordinated effort, kind of like we saw with Event 201 before COVID, right? They got together, they got their plan together. This is that same kind of a thing. There's no guarantee that this is leading to something like that, but boy, it sure has signs of that. So inflation, jobs, and this is why this is important this week, is that this is what all these speakers are talking about. And the markets are taking all this in. So we don't have to go through and say, like, what did Bowman say? What did Barr say? What did Muslim say? What did Kashkari say? What did Goolsby say? We just have to be aware of when the big talkers are out there, when the Jerome Powells are speaking, if you're a trader. But generally the consensus is, what are they saying after all this Fed speak and all this global central bankers speak around the world? Let the markets do the lifting. And we just have to manage the risk against that. So let them figure it out. I mean, it's too hard, right? It's too hard to know. Is Bowman going to have an impact? Is Moran going to have an impact? Is, Powell going to have an impact? But let the markets do that deciding for us. Okay. All right, let's keep rolling here. So we've got, what happened there? Oh, I know what I did. Okay, let's go through that. All right, so I'm going to go through these quickly. This doesn't really matter. This goes back to the Fed, all the central bank speakers on Thursday. And I think what I want to do, let's just go over to this. I'm going to flip over to this real quickly. Let's try to pick this up. And we'll just look at it on here, because there might be one thing I want to look at on here that we want to pull the chart up on. Okay, so we have this. Let me refresh this. Let's get the 30-year bond auction that came through on yesterday. Okay, so It was expected to come in right here at 4.65. All right, on the yield with a 2.4 bid to cover. Okay, it came in at the same bid to cover, and the yield was slightly higher, 4.73. So again, the 10-year note wasn't so great this week. It was down a little bit higher yield, and the bid to cover was a little bit worse. The 30-year bond, fine. Okay, so all in all, I'd say I wouldn't call it successful, but I would call it sort of like getting through. Right, we kind of muddled through these bond auctions. Right, all this issuance of debt that's coming out. And then, so let's go down to here, take a look at, I want to look at this one. I wanted to look at this. I didn't get a chance to look at it earlier today, but I want to look at this. I thought we had the Chinese data. Let me see this. Wonder if they took it off here. So there was a China, what was it called? Let me see here. That's interesting. I think maybe they took it off since then. Wow. That is fascinating. Yeah, it was a Chinese new loans. It was supposed to be out, and it looks like they pulled it. Huh. Okay. I wanted to watch that number. I want to see what happened with this Chinese new loans data. Okay, but it looks like they pulled the data. All right. Anyway, fascinating. Something I have to think about, not figured out here. Okay. Anyway, key things today, we get a little bit of data out of Canada, their jobs data. Just watching that again, neighbors to the north. What's their economy looking like? And then we get Goolsbee, another FOMC speaker today. I've talked about him. Keep an eye on him. They're grooming him for something. And then for somewhere down the road, year, 2, 3, or 4 or 5 years, something like that. He'll show up over and over again, I do believe. And then today we get this garbage 10 a.m. University of Michigan consumer sentiment number and their inflation expectations. Now, this is one of those narrative control ones that I've been talking about. It's funny that we don't get any government data, but for sure this one, even though it's a public school, University of Michigan, somehow they're going to pump their data out because I guess everything's operational at the school. So, but anyway, it's funny how we get the garbage data, but none of the other. And so this one does have an impact on markets. So we'll want to see that today at 10 o'clock. What does that do? Does that help tip these markets one way or the other on a Friday? With two up days in the stock market, 2 down days, what is today going to bring? And does today's close have some sort of a pivotal effect on the markets, right? Are we going to see some kind of a pivoting today with stocks? And why is that front and center? Because we have that really deep overvalued. So we want to pay attention to that. Okay. And then, all right. And then what I'm going to do is flip over here. Let's take a look at this. Let me blow through this stuff and then go to these headlines. Okay. So government shut day down 10. And talked about that. Now, let me go through this. This digital ID. So last night, Aaron Day was doing a show on, this week he did one on Monday, I think it was, on digital IDs. Last night he was doing a show on Freedom Dollar, FSUD. And I'm going to learn more and more about this because I think people should really try to do a small experiment with this. And Aaron's made a good point last night. Take 10 or 15 or $20, $50, move it into one of these coins, right? Move it around, put it on this little credit card that you can use, a debit card that you can attach to it, and then go out and use it. It's really a nice thing to do because this is the best form of, it seems like this is one of the best forms of privacy that you can get right now. And so it's nice to have this option because some people may want to utilize this. And I'm going to talk more and more about that as we go because I think this is really important. So I'm going to experiment with this myself here in the next couple days, and then we'll try to talk about this and go through it. But here's the reason why. Okay, so digital IDs, 17 countries have gone in the last 90 days have fallen to the digital ID. Now, we've had these digital IDs even in the US for since 2010. It's been 15 years we've had this secure ID or digital ID or whatever it is. And just recently it's taken traction, okay? And when we see this effort going on in other countries around the world, especially Mexico, right? We'll get to that in a second. We can get the feeling that it's being tested and it's coming here, all right? So Here's what's alarming about this. These 17 countries, we know that it's the same three tech vendors that are that are pushing out this tech ID, okay, this digital ID. We know that it's the same PR firms, okay, public relations firms that are doing this because we can see it in the marketing language. We can see that it's the same stuff. So it's a boilerplate deal and they're just rolling this out, okay? So they're clearly up to something here, right? It's undeniable. It's pretty much undeniable at this point that this is being coordinated. It's just very few even know that this is going on or know where to look. If people did, they would be alarmed, right? Because we've seen this pattern before, right? And so this, because no one knows, this enables them to do this right out front, right in our faces. And no one really knows what's going on because they're not aware of this. Okay, so Mexico has a full QR code biometric identification system. It's going to come into play Q1 of 2026, all right, for the entire country. This includes every job category, okay? And no one's being left out of this except maybe the cartels, and because they kind of operate under their own set of rules. So the question is, how many of you are aware, because I wasn't, that Mexico has this full-scale QR code-based biometric identification system. This is right to our south. This is concerning to me because it's a test ground, but it's really close to the U.S., and there's some overlap with, being North American, and being, in the same trade, right? We definitely trade a lot with Mexico. We're connected to Mexico in quite a few ways. Okay, so this is a lot of what the World Bank and the IMF do, is they go into places and they sort of test this out, okay, where they can force their technology upon weaker countries, weaker populations. So I would expect to see Mexico. I would not expect to see Mexico at the top of this list, but here we are. And so, again, Claudia Sheinbaum, the president of Mexico, has been pretty quiet down there, and she has tight connections to BlackRock. There's a lot of debt deals. We've talked a little bit about those, these bonobos, these different bond deals that BlackRock's helped facilitate for Mexico. So something to watch, all right? Like I said, you can find Aaron Day. I forget what it is, season 2, episode 23 or 24. He did on Monday on this. And I'm going to go through that stuff and start trying to bring that in here. And because I need to know this stuff too, right? There's, we might as well benefit from all the effort, all the work that he's doing. We might as well benefit from that. And then if we learn what's going on and we're compelled by it, now you can help share it as well, right? And that's what I'm trying to do here as well. Okay. So then I want to keep moving here. Let's go on and take a look at this. This is a pretty interesting headline. Argentina swap line. Again, we've been watching this thing unfold. This isn't anything new to us, but it's getting heated. Okay, so this $20 billion currency swap to help prop up the sharply declining Argentinian peso. I don't know if I have that one available. We might be able to pull that up. We might be able to pull that chart up and look at it. It's devastating, right? The currency is getting hammered. Anyway, having Argentina and South America, the goal here is, we know that China's made a lot of inroads in South America, and it's been kind of a quiet, putting the roots in the ground, buying their agriculture, not buying U.S. agriculture, getting something for that. Hey, we're going to buy your agricultural products, your soybeans, but we want this for that, right? So it's a this for that. And I think China's been very crafty in how they've done that. So this is a battle that we're up against, again, that hardly anyone sees. We've seen that Milei has kind of gone against this, right? He, the afuero, right? Chopping this part of the government, chopping that, chopping all these different things, trying to clean the economy up down there. Because Argentina was once a very wealthy country. And then obviously it got infiltrated, taken down, robbed of its wealth, robbed of its freedoms in a lot of different ways, robbed of its financial freedoms, probably more than anything. And so now we have the U.S. offering this swap line. Again, back to the World Bank and the IMF. A lot of times that's where these countries go when they get into currency situations. So Malay's been doing a lot of the right things, right? He's been cutting programs, trying to clean the government up. And there's a lot of controversy. You could take either side of this coin. I'm just going to take the positive side of Malay because he's partnered with the U.S. at this point, okay? So he's been doing a lot of the right things, a lot of the things that we would want to see, cutting a lot of these programs, doing a lot of the things that should be done to try to get a country back to being prosperous, right, for the people. Now, and that makes Argentina somewhat of a beacon in Latin America, Okay, so what we don't want is we don't want a failed state down there, because what does that do? It creates weakness and potentially allows China to get more inroads there. We can't let South America go the way of China. All right, so Scott Bessent is out saying that this is not a bailout; it's a credit line. Okay, and that they're going to use Argentina as an example of how the U.S. can back up its allies. All right, so and again, he comes back and says Malay's been doing all the right things, so we need to support, Argentina in this effort. And I'll get into what the details of a little bit of the details of what the swap line looks like. Okay, so Malay's also coming to the Oval Office on Tuesday. So they have an election, October 26th, the midterm election. So this is a very critical time for Argentina. And we know that the trading market, the Forex markets, they're going to get attacked. Argentina peso, it's going to get hit. It's going to be tested. And so what does this do? When the U.S. is offering a swap line, I'll come back to that in a second. When we're connecting ourselves, okay, to Argentina via this swap line, we are now on the hook. Okay, so the markets are going to test this peso, and the U.S. is going to have to step in and essentially buy reserves, right? They're going to have to buy Argentinian pesos, all right, to try to prop it up. So this is going to be an intervention in the Forex market that's going to happen here. All right, so it's going to get tested. We know that in the next couple of days. This may become a headline, right? Especially since Malay's coming to DC next week. All right, so here's the way this typically works is when right now, Argentina's short of US dollars. And this is what I've been talking about with the US dollar. Can this thing start to rally? Why is that? Because the world, as crazy as it sounds, right? We print all this debt, we create all this currency, and we think, the reason that a currency would go down is because you have too much of it out there. And because we have so much debt, you think, okay, well, that makes sense. And this is what the media tries to portray all the time. The dollar's trash. It's going to go away. Why is that? Because we have so much debt and the dollar's useless, right? It's no good. The problem is this is a perfect case in point that there's not enough dollars actually out there, all right? Because what are we going to have to do? We're going to have to give Argentina dollars, and we're going to have to take their pesos in, okay? That's an intervention, right? So we're taking their pesos, and it's supposed to be not a loan, right? It's supposed to be an even transaction. It's kind of like the Federal Reserve. When things aren't good, they're supposed to step in and buy things. And then once the confidence comes back, then what do? They turn around and they offer that back up again. They smooth it out, right? Their job is to smooth things out. When things are choppy, they come in, they do a bailout. And then over time, as things calm down, then they ease it back out into the system, right? And smooth any speed bumps out, okay? Trying to smooth out these speed bumps. In this particular case, there aren't enough dollars in Argentina. So the U.S. is going to offer up dollars. And then what they're going to do is they're going to take these Argentina pesos off. And they're going to offer the swap line at the same time. Okay, so the question is this actually lending U.S. Treasury dollars a loan? Okay, and how do we define what this thing looks like? Okay, we don't know yet. We're going to have to see how they manage this, right, as it gets tested over the next couple of days. So what's the market going to do with this? Again, October 26th, midterm elections. Malay coming to the Oval Office on Tuesday. Is the market going to try to put a test on Argentina between now and then? And the real question is this, is China going to use this to try to create a failed state? Would they actually pile on to this trade? Would it be to their advantage to make a mockery of Argentina and drag the U.S. down a rat hole with this whole situation? So this could get very fascinating here with Argentina, and something we want to keep an eye on. This is controversial because the U.S. hasn't really had to do currency intervention since I think 2011. I think we did one once before with Japan, I'm pretty sure, and then also one with the euro at some point. And then, you go back to the ruble, back in the late 90s when Russia was trying to work through that. We did a lot of interventions in the Russian ruble back then. So it's not like it hasn't happened before, but this is getting interesting, and it's probably not going to get covered yet. Next week it may come up. If the Argentinian peso gets pounded and it gets attacked, and how much will this hit the media? That's going to be the question. Okay, so hopefully we've covered that. Again, story to be told. We still don't know the whole deal on it, but that should keep us pretty much up to date with what's going on. $20 billion swap line, what's it going to consist of? How's it going to be constructed? How's it going to be perceived? And how are they going to utilize this? And what else are they going to have to utilize to make this thing a success, right? And this is a lot going to come down to Scott Bessent. Okay. Um, all right. Japan coalition collapses. All right. So here we go. All right. There's a major setback for the new LDP leader, Takaichi. So this Japan has this decades-old ruling coalition that's collapsed. Okay. The Komi-Ita party ended a 26-year partnership. So that pushes it back into the end of the beginning of the 2000s, late 1990s. All right. And they've had this partnership with the LDP. All right. The LDP we know has been weak, right, with Ishiba. We've talked about how weak that was, talked about how weak the Bank of Japan is. And now we see this Takaichi coming in, and immediately, right, there's an attack on her. Okay. And trying to get to get her across the finish line, because again, this has to pass through Parliament for her to get approved. And now we see this collapsing. So the question is, how's this going to happen? Again, another attack on President Trump, because he's got a meeting scheduled to go to Japan the end of the month. So if it doesn't look like they can get Takaichi across the line, then who's he going to negotiate with, right? There's no leadership in Japan. So this is problematic, all right? Now, from a central banking standpoint, okay, this is where Japan is in such a bad situation. They really need lower rates, okay, to facilitate their weak economy, weak politically, weak on their central bank. We know that when they issue debt, people aren't showing up to buy the debt, and they're quite weak. So they really could use lower rates, but they've been raising rates. Why have they been raising rates? Well, to defend their currency. Okay, so if they lower rates, what's that mean? People are less interested in Japanese debt. Okay, because why? Because it doesn't pay much. It only pays like 1% anyway. So, but it's on the increase, right? So people have this idea that if this interest rate is increasing, it's a game changer, right? Because Japan has been sort of used for a long time. This is that carry trade. When Japan had low interest rates, people could go in, they could borrow in Japanese yen, take it someplace else that yielded a higher rate, and they created what was called this carry trade, right? Borrow cheap, lend out expensive, and then invest in their projects, right? So they used it as what's called a funding currency. Japan, not trying to get out of that space of being used and abused, they started raising rates, right? But they had to wait until they had some kind of inflation, because they couldn't create inflation. They were very deflationary. All right, so it's getting kind of heavy, but the point is this. Japan would love to be able to raise rates because that helps them defend their currency. Again, back to this dollar, why it can rally. So we have this thing going on in Argentina, okay? Not enough dollars out there. And then we go to Japan and we see a similar kind of, not a similar situation, but another creation of demand for US dollars. Because why? As the yen goes down, what's that going to do? We talk about this, dollars on one side, all these other currencies, major currencies are on the other. Japan's one of them. So when the Japanese yen goes down, it puts pressure up on the dollar, okay? Same kind of a situation. So similar, creating demand for dollars. And we've seen this dollar making a pretty sizable move over the last couple days. All right. And we've been talking about that technically. And why does this matter? Because the dollar is going to have a lot of an impact. It's going to have an impact on gold. It's going to have an impact on commodities. It's going to have an impact on stocks. It's going to have an impact on debt markets. The dollar is the world reserve currency. And then we get into all kinds of stuff, right, with the stable coin and this whole Clarity Act, Genius Act. There's all kinds of can of worms we could open up there. But just trying to keep this simple. Another reason for demand for dollars, okay, and this will trickle over to commodities, right? And that's what that's ultimately what we want to keep in mind today are the commodities, okay, in the commodity space, in the agriculture. And what kind of a deal is, going on? And this is why South America is so important too, right? Because it's a big agricultural base. And it's a competitor to the U.S. for China. So if we want to sell our goods to China, where there's 1.3 or however many billion people, we would love to sell our goods into there. The problem is China doesn't want to do that because they have no influence over us, especially with President Trump. They'd rather go to South America where they can actually have influence for their purchases. If they buy $30 to $50 billion worth of soybeans from South America, that gives them monetary pull, and they can pull strings. Okay. with the U.S., not so much, right? It's just, and I think there's a lot that you can think about this, right? I think this is something, if someone has interest in it, they can think deeper here. What does that do for our farmer? Our farmer is actually in competition for Chinese demand from South America, even though South America is our friend. So it's kind of a triangle if you think through that whole thing. All right. So hopefully that's given you enough of a at least, you know, background to at least think about how that thing can work. Okay. Now let's keep rolling here. We've got another, oh, I think I just blew that up. All right. I think we're good. Okay. Argentina swap loan. Swap, again, they're calling it a swap. I think it's really a loan. All right. Japan coalition collapses. All right. We just went through that one. Now, Macron is out to Francois Macron. Francois? Yeah, I think France is Macron. I'll just put it that way. Francis, I always forget his first name. Joker Macron, right? We'll call him that. Okay. So Macron needs to name a new prime minister tonight. And let me see if I've got this. I didn't get a chance to throw these things on there, but I think I can do it pretty quickly. I wanted to show you this. So Macron has to name someone by tonight. And let me see if I can put this. There we go. That should work. Okay. So Macron has to name someone by tonight. And now it's getting hairy. Okay. He needs to find someone who can keep the markets calm and fits all the political profiles. So we saw this Lecornu was only in for 27 days as prime minister. France has had 6 prime ministers over the last 2 years. Okay, so 1, that's really bad, but 2, it's accelerating, right? This Lecornu couldn't even make it 1 month. Okay, so it was bad and only getting worse. Okay, so France is truly struggling to form a government that can achieve a compromise. Okay, so and what they need to do is, yeah, what's really going on here, let me just call it out what it is the governments in the world have been very good at privatizing profits and socializing debts. Okay. And so this is the sign of this running course, right? And this is the sign of governments ripping people off. It's coming back to bite Macron, all right, and many other leaders, right? But Macron's front and center right now in this whole thing. So Macron has 3 options, okay? He can name a new prime minister. He can go to a parliamentary election, right? Or he could potentially resign. He said he has no intentions of resigning and that he's going to ride out this term. I think it's his 4th term. I'm pretty sure that's what it is. So he has no intentions of resigning. So that means parliamentary election. Not necessarily the best option. And naming the new prime minister. So they're going to go down the same rabbit hole, right? Rat hole, really, of naming a new prime minister. And that's probably what's going to happen by the end of the day today. So the Socialist Party there, okay, which is their center to left party, they kind of remain the kingmakers there, all right, for the government and the budget. And so there's 2 main points here that they're dealing with. 1, suspension of the pension reforms, and this will cost on 3 points on the deficit into 2026 and 2027. So again, ripping off the people, privatizing the profits, socializing the debts. This is where they're at, right? They've socialized the debts and now they're having to deal with this. This is what Lecornu is clearly having a problem with, is coming up with some budget, right, that's going to work through this whole thing. And then they have this other option, right, which is very costly new wealth tax, right, from a fiscal perspective and an inequality perspective. So again, this is going to create more haves and have-nots. And will this bring the gap down? And the problem is, how are you going to get reelected? Think about this. If you have a leader, right, that's been getting money from the haves, okay, and now you start putting on a wealth tax, it's going to take money from them, your chances of getting reelected or your party getting reelected in this parliamentary election or the next one to come isn't real good. So this is not good for France. And it almost looks like there's potentially no way out, right? They are boxed in. Okay. And so what does this do? Again, back to the dollar, right? Less security in Europe. And will it start to unfold into other parts of Europe? Will it start to unravel? If it does, that does what? It creates more demand for dollars again. Okay, so we're seeing, what I'm trying to point out is the potential increase in demand for dollars around the world, right? Argentina, Japan, and across the European region. All right. And, and I've talked about this many, many times, but again, Japan has its own debt market, but it has one common currency with all of its neighbors, and that's called the euro. And this is what creates fractures and makes these things fall apart, right? This bad structure that they have, this euro with one overlord over all these governments that makes them think that they have autonomy when they really probably don't, except in times like this when, you're probably not going to find Christine Lagarde and Christian von der Leyen, okay? You're not going to find them having to deal with this. This is going to get dumped on Macron. He's going to have to take the hit on this. They might throw things in over the fence, but they're really not going to show up to help him deal with this whole thing, right? They really can't. And so this is where the fractures come, and this is what can actually break the euro apart. What does that do? That's more of that. That would be massive amount of demand for the dollar. Okay, people coming out, flight risk, right? Money coming out of Europe into the U.S., and this is what we would look at in the Dow, right? The bond markets, the gold market, right? Different types of things like that. The gold market, anyone can access that, right? And it all balances out with gold. Whether you're buying gold in Asia or buying gold in London or you're buying gold in the U.S., it doesn't really matter because it all equals out, right? It all gets arbitraged out. So that doesn't really matter. But the point is, it's really U.S. debt, U.S. currency, U.S. assets, all right? That's what would potentially be the beneficiary of a fallout across Europe. And this is what can make that dollar go. If it crosses that 100 level, that 100 index level, this is what can make that thing start to catch fire and go to 105, 110, 115, 120. And this is when, if you get onto that, you just have to kind of sit back and sit on your hands, right? Kind of like this tech trade. Once these things get going, you really just have to take a deep breath, and sit on these trades, right? Because these are things that can either go quickly, so fast that you can't believe how fast it's moving, or it can take a long time. It's just not easy, right? And it's not easy to sit on a winner, right? If you happen to get into this trade, long dollar, short these other currencies, it's going to be very hard because, again, there's going to be so much narrative control over this, right? When you're talking about politicians and political, establishments falling apart, this starts to create massive ripple effects. So you're going to get media spin, and you have to really sort through the truth on this because they will try to fool you, 777 ways to Sunday, right? They'll try to fool you over and over again. All right. And again, none of us have really been through some of this stuff. So I'm going to turn this news wire down. It keeps chirping. Okay. Let me come back in here, keep rolling here. So that's, again, Macron. All right. Let's keep rolling here with Israel, Hamas. All right. Quick on this one. This shouldn't take too long. It's, yeah. I just want to briefly hit on this in the sense that Israel's taken 2 years to get a release of the hostages, right? Release of Israeli hostages. I think it's 48 alive and dead hostages. And then there's 2,000 Palestinian prisoners, right? That's at least what's being put out for us to see, right? Those are the headlines. Now, phase one, okay, 20-point plan, right? President Trump's going to be going there next week to take some form of a victory lap. The question is, this gets crazy too. Trump's plan does not require the removal of Israeli forces from Gaza. So I think they'll stay occupied in over 50% of Gaza. It is really hard to figure out what's going on here. And I think that's part of the point, part of the plan, right? Is for us to really not understand what's going on. And so, they're going to whitewash everything. But the question is there really a peace deal that's going to last here? And a lot of experts say no. History would tell us no. And I'm going to leave it at that, right? There's the big takeaways for me is this, there's another thing that's going on down here that I can't help but interject, right? Last night, I jumped in with Aaron Day and we were talking about this a little. We were talking about currencies and digital currencies and this digital secure ID, okay? And it rolled over that Tony Blair, okay, again, the Prime Minister of the UK from back when, he's rolling out a lot of these digital currencies, but he also is going to be on the board, right, in Gaza in dealing with this whole thing. That is a weird connection, all right? And I don't know enough about it to talk about it. All I know is like that was alarming last night, and it went on my list of things to check into because Tony Blair is clearly a globalist, clearly connected, okay? A lot of these politicians leave and then they actually get more powerful, right? So they have this most everyone knows Tony Blair's name. And in the not so good things that he's been involved in through the years, and then now he's connected to this digital ID and he's connected to overseeing on this board of what's going to happen in Gaza. Again, that's all I know, right? I don't know any more than that. All I know is that is a very weird connection, and I want to check into that more. So that's my biggest reason for bringing it up is back to the digital ID, okay? Back to the technocracy, back to exerting the will upon societies, which I think is going to become more and more of a story, right? It's going to become more and more of a story. As long as we're paying attention and we're not getting bamboozled by other things, other things that are going on, such as, and again, I'm not trying to belittle the Charlie Kirk thing, but all this stuff's going on, right? While we're over here focusing on this completely false story, 50 things you can point out with this Charlie Kirk thing that don't make any sense. And then they say, well, he was involved in Israel. He lost some of his donors. That's why they probably took him out, right? We can make stories about this all the time. The point is, while they have us looking over here, right? 17 countries have fallen for this digital ID, Mexico being one of them, Tony Blair being a part of all this thing, being the guy that's handling a lot of this. And now he's on the board in Israel with for Gaza, like on the behalf of Israel. Like, this is something we need to look into. This is just crazy stuff, right? And so, again, from a financial perspective, and from a freedom and privacy perspective, just a major, major issue. So I'm going to check in the chat here. I see some things going by and say good morning to everyone. And then we'll jump into some charts. So good morning, Trumpet. Good to have you back. Hope your travels went well. Zero Woke, happy Friday for sure. Rachel Hawk, is it really Friday again? Yeah, it goes by fast, doesn't it? Geo Rich, good morning. Interesting that gold and the dollar are both pumping. Yeah, that's true, Geo Rich. Yesterday, gold had a pretty sizable sell-off, and I want to take a look at that. We had divergence on a moderate time frame, and it marked dead top, and then gold got crushed off that level. And there were a lot of gimmicks going on in this gold yesterday. The algorithms were I don't know if in full force, but they were definitely in high gear. Okay, and definitely manipulative. And we're at a pivotal point in gold, right? At this 4,000 level. Okay, and I want to show you that today. All right, so let's keep rolling with this. How is overvalued defined? Good question. Good morning, Frank. I didn't want to skip TZ Burton. Do you have a link to YouTube and X? Do you have a link? You actually do you mean for the show, TZ? On X, you can find it just by looking at Real World HD on X. And for Aaron Day, you can go to Aaron R. Day. Or you can go to the AaronRDayshow.com if that's what you're asking for. So those are the only two that I've talked about. So it's either... And I think same thing on YouTube. You can look up World of Harmonic Deconstruction or at Real World HD if you're looking for that. Nobody's really watching this on YouTube, and but I haven't done any development either on that stuff. Okay. So back to Gordon. All right, how is overvalued defined? So a lot of people would call that when things get far away from the mean. Okay, so if you've got an average, a mean, a moving average, a trend line, a trend channel, okay, something that's moving in a direction, and something goes not, and let's say that it's linear, okay, there's some, and linear is a funny word, right? Because linear doesn't mean that it looks like this or like this or like this. It just means that it's moving in a direction with some fashion of, a volatility range, right? So it goes up 20, goes down 10, goes up 20, goes down 10, goes up 20, goes down 10. Well, you know that that's a trend that's upward, right? It's going up 20, coming back down 10. That's kind of this linear movement. When it starts going up 80 and coming back 10, going up 120, coming back 10, going up 150, going back 10, now you're starting to move out of that non-linear world. Okay, and you're going into, some sort of a logarithmic exponential type of a move. So that's one way of thinking about overvalued. When things start to go non-linear, and it doesn't, and again, we're talking about, a market movement, and then we're taking the slope, and then we're taking the rate of change, right? We're taking a derivative and the derivative, second derivative of that if we can, to find, what's the slope, how steep is the slope, when does that slope change, right? Is it the slope starting to weaken? And then what is the rate of change, okay, if we can measure that? And we can look at things like divergence. So to me, I look at different time frames, and I call each one of those like a rubber band. So if you've got 5 time frames you're looking at, and every one of those time frames is overvalued, then that means all the rubber bands are stretched in one direction. And so to me, that's overvalued, okay? You're not going to get that very often. Sometimes you're going to get like 4 out of the, you're going to get 4 out of the 6 or 5, 3 out of the 5 that are overvalued at the same time. And so you can use that to your advantage, right? You can say, okay, I think the trend is up, but my 4 shortest time frames are undervalued. They're all stretched. And if I think of it like a dog and a tail, right? You've got the dog and then you have the tail. Usually the dog wags the tail, right? But sometimes, right, that's a trend, right? When the dog's wagging the tail, to me, that's a trend. When the tail wags the dog, right, that's a change in trend. Okay, something's happening, right? Something in the little tail is now making the dog, right, wag. All right, and so when that happens, that's a shorter time frames in my mind, changing the trend. Okay, so we're always watching for that, but we know again, and I want to look at this today too. I wanted to load this up. Let's make sure we get this up because I wanted to talk about this Elliott wave, and this might be a good time to do that. Let me throw this in here. I wanted to kind of go through this because this hopefully will, let me load this guy up. Okay, so let's go through this. And here we go. This might help in this conversation. Okay, let me clear that off there too. We don't need that. All right. Okay, so of course, now this is on there. Let's see what we've got. How do I clear this? Okay. All right. Let's clear that. That should do it. Good grief. No. Yep. All right. We can live with the globe. Okay. So here we have Elliott wave. All right. So let's just say, right, that, things move in these waves. Yeah, I think that'll be okay. So what we're looking at here is at the top, up by me, right? We have what we would call some kind of a trend ending, right? A divergence, all right? A slope changing, a rate of change changing, okay? And we can look at different ways of measuring that, right? We've talked about that. Higher highs in price. So look at this, right? So this, I think that's right. Hopefully that's the way you're seeing it. So we have price going higher, okay? You can do this with your 3, then you flip it around and the indicator is actually going lower, all right? So that's an easy way to remember it. Price going higher, indicator going lower. What is that going to tell us? Mathematically, this market continues to press higher, but the math behind it is starting to show some kind of rate of change, right? Some sort of a slope change, a rate of change. We can look at that. We can find that the market is just getting exhausted. Okay, so that would kind of fit into this overvalued concept. The other way we can do it is we can look at things like, you can look at valuation metrics, right? You can look at gold and you can look at these things called commitment of traders, and you can say, well, the commercial trader, okay, the big guy, like the Cargills, right, that need to buy corn to make corn syrup, right, and then sell that to all these other. They're doing this, and then you've got the large speculator, the hedge fund. They're doing this, and you can look at the small speculator, and you can say they're doing this, and you can make this assumption that it's overvalued because the large speculator and the small speculator are doing this, and the commercials need to buy this. And so you can look at all these fundamental things, right? Or you can just look at price, okay? And you can look at sentiment too. That's the other thing, right? That's why what we're looking at, we see that overvalued, on the stocks. And I don't know if I have that available, but let me see if I can just show you that real quickly. Yeah, I think I do have it available. All right. So here's this thing again. We were looking at this the other day, right, on the stocks. I've got those 2 things highlighted in red, okay, the S&P and the NASDAQ. What we have here is columns, right? On the model, this is a daily, that middle one is a daily time frame. The weekly is this next one, and then the monthly is the one on the right. You can see we're overvalued on all these, right? And for not just this current period, but 3 periods ago. So what we're doing is we're looking at the current period, the last period. So again, a month, this month, last month, the month before that, overvalued. So we're looking to see when this stuff builds. What this means is this is a synthetic sentiment measure, all right? So we're looking, so we can look at price, right? We can look at synthetic sentiment. Okay, that one. I think that's where I want to be. Yep. Okay. We can look at fundamentals, we can look at sentiment, and we can look at price. Okay. And any one of those things, if we do it right, can tell us overvalued. It's even better when all three of them tell us that. Okay. So in this particular case, at the top of this thing, we're looking at divergence. Okay. And the end of a trend on the upside. Let's just take this and say that this looks like gold, right? Gold's been pressing higher and it gets kind of choppy at the top. And somewhere up in here, I don't know if that'll show up or not. Doesn't look like it probably does. Maybe it does. So right over in here, right, that third wave up, we start to get some kind of a change in trend, a divergence, overvalued, right? Then what do? We get this plunge to the downside. We get wave one down. Then we get this kind of choppy trend channel up to number two. And then we get another plunge down. That's really the second wave, okay? But it's labeled as number three. And then we get this choppy pattern back up to four, okay? And then we get down to five, right? We get another plunge to the downside. So let me throw this in there, and so we can flip back and forth through these. So the impulsive waves are the ones in yellow, right? Those are the drives lower, and the other ones are those corrective waves. That's what we were looking at with the stock the other day. Were we getting some kind of a corrective pattern? Did we get wave one down? Okay, so think of this in terms of the S&P, right? And gold, right? We can use either one of these. And maybe these two are connected. Okay, we've talked about that. Money goes into stocks, then it wants to get out of stocks and it goes into gold, right? A reallocation into gold. So these two might be coming paired because they're both becoming risk on assets, risk on, risk off. So they could be getting paired. So we can think about gold and stocks maybe potentially together. Anyway, either way this case works. We get wave one down. We get a corrective wave up to wave two. Are we going to get that next wave down, that second yellow bar going down into wave three? And then what we can't have is wave four cross over wave one, right? That's Elliott wave. That's the biggest rule with Elliott wave is four can't cross over one. So the highs on four can't cross over the lows of one, right? And I think that's pretty much, and the key here is that things move when you get into a trending move or even a corrective move, okay? You're going to get these drives in a direction, and a lot of times you're going to get these three-wave patterns. Once you get that wave five, you're potentially going to get divergence down at the bottom again, right? You're going to get some sort of price being stretched, and you can measure this on all those different time frames. Back to the dog and the tail, right? What's wagging, the dog or the tail? Is a dog wagging the tail, or is a tail going to wag the dog? During 1 and 3 and 5, right, these pushes down, the dog is wagging the tail. At the top, where you have divergence, or at the bottom where you potentially have divergence or a change in trend, that's where the tail is potentially wagging the dog, right? And you have to go to a shorter time frame to try to pick up on that stuff. Hopefully that makes some sense. So that's how I think about overvalued and undervalued. You can use multiple different ways of looking at it: sentiment, fundamentals, analysis of different data, whatever you want to use, commitment of traders, large speculators, small speculators, commercial traders. You can use price, right? You can use I'd say those are the majority of things, right? And just intuition, you think, hey, this market's getting a little overdone. As long as you can fight the trend, right? When you see that this deep overvalued, in stocks, are you part of that number that's saying 95% of people think it's going higher? Or can you be a contrarian at that point and say, okay, almost everybody's getting loaded up on these stocks. Do I think maybe they're going to sell off? Has this thing gone too far, too fast? Is this AI thing, is it getting stretched, right? So those are the big things. So I wanted to show that Elliott wave. We talked about that a little bit yesterday. So I wanted to kind of give you an idea. That gives you enough if you want to go and read up on it. You can go read up on it. But it gives you the idea of three-wave patterns, corrective patterns, and these different things. And I don't put a whole lot of credibility in Elliott wave. I just know that when I get a harmonic structure, I like to look at the halfway level and see where that lines up around that three. What happens when we get... So that makes me think there is something to this Elliott wave, even though it may not be a perfect process. But again, this is why I watch that halfway harmonic, that dark green line. What happens? Are we at a wave three, and do we gap through that halfway harmonic? And then do we come back and test it? Think about that. 1 and 4, right? If one's gonna mark a low and 4 is gonna mark a high, and you're thinking about these harmonic structures, the 3/8 and the 5/8, and if you get, you punch through from the 3/8 to the 5/8, and you come back up and retest the halfway. If you're not breaking that Elliott wave, then you might have an Elliott wave pattern. It gives you what? The continuation. So, 3 being the middle, the halfway, and 5 is the full upside objective, it fits, right? These two things they coincide with each other. So hopefully that makes sense. Hopefully, again, like I said, when I get on to doing these instructional things, I want to talk through some of that stuff, but hopefully that gives you the gist of it. If you have any questions, just let me know. Maybe we can talk through that stuff in here. Okay. All right. So hopefully that makes sense, Gordon. Perfect chance to talk about that. And then I think the Real ID is a precursor to digital ID. Haven't gotten mine yet. Yep, I agree with that. Trumpet agrees too. Says Shine Bomb and Think Mexico. Yeah, if you want to add to that, say Shine Bomb and Think Mexico. If you want to add to that, Trumpet, I'm not sure exactly what you mean there. I mean, it's kind of funny, but I'm not sure. Okay, Rachel, I did get mine, but was unaware that it was at that time. It was like 2 years ago. Gia Rich, what are your thoughts on ticker UAMY? Okay, well, maybe we'll take a look at that one. Jay White, good morning, Jay White. I owe you a phone call. I apologize. Okay, I went to Mexico twice this last year. I was surprised that tracking U.S. customs were serious and the questions, etc. It wasn't like that before. So that's a good point, right, Rachel? I mean, that's boots on the ground, right? That confirms what we're talking about here. So again, that's what helps us. All right, TZ Burton, I have a Nexus pass to travel to Canada in the airport. So I'm already tracked in the matrix. That's right. Yeah. Oh my gosh. We could get into deep ones on that one, TZ Burton. I think we're all being tracked in the matrix. All right. Jeff Snyder talks a lot about the Eurodollar on his channel. The world uses US dollar and wants them. Yes, I agree with that, TZ. And that's why we're watching this thing technically. And that's why the Swiss franc is important, because again, Switzerland always had its advantage because why? Its initial advantage is that it sits in the mountains and it's hard to protect. It's hard to attack Switzerland because of the mountains, right? I think that was what gave it its concept safety factor. Then it took on banking and it took on, gold and making certain products and, the Bank of International Settlements and Geneva and, CERN and all these different things that Switzerland's involved in, right? Connections to China, connections to Israel, connections to World War II, connections to the Nazis, connections to all these different things you can throw at Switzerland, and it just kind of sits there quiet, right, in the background. Well, if somehow this stuff's going to get exposed, will the Swiss franc be the one that reveals first? If something's really changing, will it happen in the Swiss franc? And we've seen such a massive downtrend in the Swiss franc. Again, it depends on what we're looking at, right? Are we looking at the Forex or the currency? Because you have to flip-flop them. And I wasn't clear on that the other day. A friend of mine pointed that out and said, so I'm like, yeah, you're right. I need to, well, I said I'm right. I said I need to be more clear on that when we cover the Swiss franc, right? Make sure because the futures we want to go down and the Forex we want to go up, right? It's just what's over what? Is the US dollar over the Swiss franc or is the Swiss franc over the US dollar, right? That's what creates that inverse. We're not dealing with different things. We're dealing with the same thing. It's just, it's like taking a cat over a dog or a dog over a cat. You know what I mean? It's like, you just got to make sure that you're comparing things and make sure you have it straight. All right. So we'll do that when we get to the charts as we go through this stuff. All right. Okay, this is weird, Blair. Yeah. If you can check into that, you guys, it's a good thing to research. Check out Tony Blair. What's he up to? See what his involvement is in this digital currency, right? One, sell it to yourself. Do your own research. And again, hopefully I'm just the tip of the spear on that, and you dig into it. One, you're going to find things that I don't. You're going to think about things differently than I do, right? Differently than other people in the chat. But anything you can add on that, any little things that like this, Rachel's been to Mexico and she saw a change, okay, great, perfect. Those are the things, even though we're small, we can still be mighty, right? In terms of, understanding and sharing with each other, right? And hopefully growing this, no matter how it grows, whether we grow, to 1,000 people in this chat or 50, or 30 or 20, the reach that goes on beyond this is what matters, right? That you're talking to the people, and they're talking to people and, again, anything we can do, right? Whether it's small or big, we'll do what we can. All right. So that's the key. All right. Then we have crash and splash. Any Brits in Gaza would be weird. Yeah. I don't know. This is why it's important to watch that, Trumpet. Okay. Crash and splash. Every time there's a negotiation, someone does so far. Craig over here dropping $1 million lessons. I hope so. Hopefully, it's $1 million for you guys on these lessons. Okay, Rachel Hawk, right? Frank, you're better to take profit before there's a reversal at point 0.5, even if the end it goes down a little bit lower. True. I mean, that is true, Frank. And again, everyone has their own trading, style and their own risk tolerance. And so that's why the harmonics are great, right? We've seen in here where we had the 65. Let's just look at some of these charts rather than me just talk about it. We've looked at this enough. Okay, so let's go in here and take a look at this. We've got this S&P. A couple things we want to point out in here. Okay, let's go. Hopefully I've got everything I need here. We'll let this fill in for a second. I think this is the one. So this is at 65.74. It doesn't really matter that it didn't stop the market. Sometimes it will stop the market dead in its tracks. We've seen that with silver, right? Got up to a harmonic structure and then got slammed off of it. And then it comes back and it retests that level and then it punches through. And then, we went from 39.73 or whatever it was, the full upside in that silver. And now it went to 50. Okay. And sure enough, we said that, it should have hesitated. Silver should have hesitated, at that other prior high. And it really didn't. It just blew right through. It went straight to 50. Then it got to 50, it reached up there and it was a great short the other day. When it hit 50, that was when gold was hitting its divergence. So again, confluence across these markets and silver got whacked $2, and that whacked, right? 50 down to 48, in the futures market. But it was a great trade, right? You have a good idea that that's low risk, right? You're at this huge upside psychological level. It's potentially a double top, right? We can't rule that out. We don't know that silver's going to 100 or 80 or 60. We don't know what it's going to do next. But when it gets to that 50 and you see it reaching, right? It's out over its skis, right? It's like it's thrown a punch, right? And it's at its weakest spot, right? It's extended all of its energy. And now's the time if if you're in a boxing ring, well, that's when you take your jab, you know what I mean? Or you take the whatever. That's what we're doing here. You know what I mean? Like, this is a war. In my mind, this is a war against a lot of the bad guys, because especially in the futures market for me, I know that there aren't many small everyday people trading in these futures markets. So I have no problems. Any penny I take out of there is a penny that's coming out of the hands of the elites, right? Of the the quote unquote elites, right? These people that aren't for the people. And so that's great for me. I know who I'm going up against, all the time. And so anyway, back to Frank's question, on taking the profits. So that's everyone's, everyone has to figure that out for themselves. But here's the key, right? This is why these harmonics are great. That, when you get to that 65.74, you at least have a point that you think it should have some impact, right? A lot of people would look at this and say, well, your level's useless. That 65.74 doesn't mean anything. Well, it's not true, because we were working on that back in March, the signal? I forget when it was, March or May. I can't remember when the signal came, probably May to June. Yeah, it was May. It came in the end of May. So we had June and July. In August, we worked on this thing nonstop, right? Watching it make progress toward that 65.74. So we had a target. Once it got to that 65.74, and when it punched through, it should come back and retest the 65.74 at some point, right? There's a high probability that it will. But that being said, when it gets above there, that this thing is strong, right? And so if you can buy weakness, buy dips and sell rallies, you should end up getting bailed out by the tailwind, right? Ultimately, if it continues to go higher and you don't get pushed out of the market, if you're a trader, right, even if you're an investor, it's the same kind of a thing, right? Same concept. The trend is clearly up. It's above 65.74. We can at least manage a risk against that 65.74. And now we've got another level, right? I threw this purple one in here that looks like it created some resistance. So that's at like 67.23. So again, if we're thinking in terms of this market potentially is topping out, this would be a first target back down to that 67.23, right? Where that little purple shaded zone's at. If it breaks through that, then potentially it makes a run at the 65.74. When's that going to happen? I don't know. Is it overvalued? Back to Geo Rich's question, or Gordon's. I can't remember if it was Geo Rich or Gordon. But the point is that, are we seeing is the tail wagging dog here? That's the question. That's why I started to show off by saying, it's been a real battle trying to fight this tech move, and on the upside, right? That is do you sit on your hands and ride the trend? Okay. Frank would say no. Frank would say, let's take some profits potentially, right? That would be his strategy. And then if you do that, where are you going to get back in? Okay. Well, it's okay to sell something at $10 and then it goes to 20 and it comes back to 15 and you rebuy it. You can say, well, I can't buy it unless it goes below 10 because I sold it at 10. The concept is, look, you got your target at 20, it went 10, it went to 20, now it pulled back to 15. Are you going to step in there and buy, believing that it can go back up to 20 or higher, right? One of the downfalls that I know I have is saying, okay, well, I'm not going to buy it unless it goes back below 10 and I can get it cheaper than where I sold it, right? That's sort of foolish, right? The market's proven that you weren't right on the 10. You still might have had a profitable trade. It gets to 20. You have to be willing on that pullback to 15 to say, yeah, it's higher than the 10, but I think it can go to 25, right? That's following a trend. And so anyway, I don't want to get too far off the beaten path. Let's just look at these charts, blow through this stuff. So we got this 65.74. The S&P continues to push on the upside, but let's look at this. This is what I want to talk about on this upward sloping trend channel. So again, this back in here could be considered a potential wave one, right? On the downside, back to this thing, right? Yeah, so it could be that potential wave one, right? Okay, so then we get this consolidative move, okay? That could potentially be that move up to 2, right? That potentially choppy. And so what we're looking for is the next wave down. And where were we looking? We were looking right in here. Okay, let me put this in here and let me turn this to pink so you can see this. Why am I having a problem with this? Let me see. Oh, I see why. Okay. Here, let me turn this to pink. Okay, so that's where we're looking. Would this have been, right, potentially 0.2? Okay, that's what we were talking about the other day. Could that be that consolidative move up where the market sells off? It wasn't, right? It blew through. Okay, so again, the tail did not wag the dog. The dog still continued to wag the tail, right? And this thing pressed on to new highs. Here's the interesting thing, though. The market gets up here, starts to taper out, builds up some energy. Okay, we're talking about this, right? We talk about these energy builds all the time. You can see the red going inside the white. So we get an energy build. The question is it going to press higher or are we going to see a move back down again? The odds are that it's going to press higher. But you can take both sides of that. Doesn't matter. You could say up, there's energy there. We don't know what it's going to do. But the odds are with the momentum and other things that it could have pressed higher there. It didn't. It starts to break down. Look where it stopped, okay? It came back down into this area and it hesitated at that trend channel again. All right. Maybe a coincidence, right? Then it goes back down. Look, it spends a lot of time around this thing, trading around it again. And then we see it come all the way back up again here again after it breaks down yesterday, goes sideways, comes back up and retests it. So here's what I'm contesting is that there's some sort of there is a potential here, right? That the big boys are trying to sell up in here for some kind of a pullback. Is it the top? Probably not, because the top could have occurred at 65.74, right? When the energy was potentially out of it, right? On this thing. If there was going to be a top, and this was going to be a major top, I think it would have happened back here where those two big yellow circles are at, right? When the harmonics, that's where I would have looked for a top, a significant swing top. The fact that it blew through there, I don't think we're at that yet, but we could see some kind of a setup for a pullback in here, right? And this trend, I'm finding it funny that it's coming back and finding this trend channel after it shouldn't be any of value at all. So was that blow off to the top that created new highs up to that blue shaded zone? Was that a false blow off top? Okay, maybe, right? Then we see it come back down, have some respect for this trend channel again. And so here we are again. We sit here right below that thing, and I've been short the last couple of days, shorting it down into here again, yesterday, and then taking some profits, late in the day yesterday, carrying a small position overnight. And as we get done with this, I'm going to probably come in and see if this thing will hold and try to start shorting it again, right? And I'm going to, and this is what I'm trying to bring back, right, is I don't know where the top is going to be. Like, I don't think anybody can, it could have happened at 65.74. It didn't, Now I don't know. But all I know is that weird things are happening. And we see, again, Argentina, Japan, France, the dollar starting to make a move. The dollar going up would probably be negative. We don't know, right? Does the Dow, all U.S. markets have a pullback? The Russell, the Dow, the S&P, the NASDAQ, right? Could all those have a pullback, yet the Dow holds up better than the rest of them? That would mean a capital flow, right? And global asset managers are happy with that because the market pulls back 10%, 15%, and the Dow only pulls back 3 or 4 or 5. Their net differential is 10%. And they still had exposure to the equity market. So hopefully that makes sense. I don't want to get too deep in the weeds here. But that's what we're looking for, right? Could the big elephants be leaving footprints right now? And could this market have some kind of a topping pattern in place? Why do we care? Why do we think that? Because the overvalued, right? The daily, weekly, monthly overvalued. And that goes back to the question asked earlier, what is overvalued? Hopefully we've gotten that. Could be analysis, could be fundamentals, could be price, could be sentiment. Right? We're looking at sentiment and price. So we're looking at the sentiment, right? Synthetic sentiment, the red, all that red on that thing, that's the sentiment. The synthetic sentiment, right? If we polled 1,000 people, 100 people, whatever, 90% would think this market's going higher. We probably want to be on the other side of that. That to me is overvalued, right? And then we want to confirm that with price, or we want to confirm that with things that are going on in the news, right? And news is another factor, right? Sometimes when you hear everybody, sometimes you have to take the other side. That goes in with the sentiment side of things. Okay. Let's take a look at, I want to look at this. What else did we want to look at today? Let's look at silver. Let's take a peek at that. Okay. So silver hit this 50. This is probably, you can see on the right, this total reaching up of silver. This is nonlinear, right? This is probably, you could probably define this by overvalued, right? This I would call this overvalued. You've got this prior high back in here in 2011, okay, and then you see silver reach up. To me, I would call this overvalued. Just by glance. Now, can it blow through 50? Sure, it can. Should it have stopped here at 45 to 46 in this purple zone? It probably should have, but it didn't. It just blew right through there. So will it now trade this range? To me, that's a question. That would be a nice thing to see happen, right? That it just starts trading this range in here between 50 and 45, okay? $5 range. So that, can you short it up here around 50, another test of 50 and have it come back in, right? Potentially, right? And can you get a nice trading range out of this thing? And you can see here, this is when it hit that 50 yesterday, right up in here. Okay, it hit 50, and you can see it just got hammered off of that, broke new lows. I wouldn't put too much faith in that at this point because, it's pretty buoyant, right? Silver had a big sell-off at 50, like you would expect, right? Double top. Who's going to stick their neck out above 50 at this point without taking some profit, some consolidation? I don't think many people, again, unless someone's just desperate and they have to get silver and, and there's something really major going on, like war's about ready to break out, then people don't care. They'll stick their neck out. They're like, I need this exposure. So if something major is going on, then they'll stick their neck out. But I would think that this 50 should hold. But again, if not, we know where we're wrong, right? So again, above 50, you're like, this thing just isn't going down. So you get out, right? Take a small chance here so if you're willing to risk $1.50, so let's say you can sell it at 49.50. It's sitting at what? 48.50 now. So let's say it's sitting at 48.50 and you're like, look, I'm going to let it go up to 50 or 50 and a half, right? So right now you got a $2 risk, okay? And the question is, can you get it back down to 45? Can you trade it down there? If so, then that's essentially a 2-to-1 risk reward, right? Not quite, not quite that. So the higher you can get it to 50, actually the lower your risk is, and the higher your reward. And that's what we want to try to do is create those outsized potential rewards and minimize that risk, right? And it's not easy. Sometimes you'll get some that are 10-to-1. But you're not going to get that by being like the crowd, right? You're not going to get 10-to-1 risk reward ratios by being like the crowd. You're going to have to think very differently. And I've talked to some people, this is going way off the edge here, but you'll see these trading systems out there that say 90% correct, 90%, 85% correct, whatever. When I see that, I know it's a fraud, or it's almost for sure a fraud. If someone were to come out and say, I've got this great trading system and it's 10% correct, 10% of the time, most people would run from that. I would say, tell me more. Like I would want to have lunch with that guy because I'm like, okay, what does that mean? Well, what I know is he's saying I get 10 to 20 risk reward ratios. And when I'm right really big, as long as it's a winner, versus the 90%, you might be right 9 out of 10 times, but you have that one loser that's brutal. So those two are juxtaposed, right? The one guy who says I'm right 10% of the time and the other guy who says I'm right 90% of the time. And my models both, I believe the guy who says he's 10%, if he's got a profitable, probably more than I would the 10 because the 90, because that one loser is going to be devastating. Whereas the other guy is going to catch that one big winner and it's going to be a 10-1. And if he can manage the losers really well, then it makes more sense. So hopefully that's kind of off the deep end. There's another thing to toy around with from a trading perspective. All right, let's see. There was one in here. I'm just going to look at this one that they put in here today, UAMY. Let's take a look at that. We'll look at that thing and then we'll kind of call it. I'd love to look at the agriculture, but we're just running out of time here. Let's look at this UAMY. Okay, wow. What's this one? United States Antimony Corporation. All right, so this thing is absolutely flying. That's a weekly chart. Wow. Let me back this down and see what we've got here. I don't know what to say about this one. This thing is on fire. Yeah. Let me just do this. The only thing I can see to do off the bat here is just to see like where it is relative to, its Fibonacci. So if we just take this wave right here, we go from this high down to here. Okay, and this is a pretty substantial wave, right? You got a decent top that formed up in here. Okay, we have a decent extension, right? We could probably do a Fibonacci up into that area, but it doesn't really matter. And then we get this pullback, and it's pretty substantial because we get a double bottom. Okay, so there's something there. It's up against a trend line, right? That green line. Okay, so that's good. So you had a couple things that came in there. And that was it. Again, it's easy to say now, but this one right here was a pretty good potential buying spot, right? Because I can guarantee that you had plenty of opportunity to be a buyer there, and it came up against a moving average, so you could manage your risk. Okay, this would have been again, hindsight's 2020, so I don't want to sit here and do that. But the point is, that would have been a fantastic spot, to be a buyer there at $6 or something. Anyway, that's not our position now. So now this thing's ripping. I would say if you happen to be long this thing, I'd be looking at this as a target like 1160, 1150, and see if that 2618. So that's a pretty extended market. That 2618 would be something that I would be looking at as a potential, something for it to reach up and grab. Again, this is looking at growth patterns in nature. Will that 2618 be some kind of a stopping point for it? At least it gives you a line in the sand, right? Again, try to shoot for that. If you can get it, that's great. Managing risk, I would probably say, look at this 1618 or something. Like this kind of makes some sense down in here, right? Maybe something like this. Looking at this 1382 to 1618. But the key is you've got a gap here. The thing that's interesting, if you blow this up, right, at that point, again, this is what kind of gives you proof that there's something to these things, is you can see a lot of gappy formations right in here, right? You get this push up, then you get a move down, then you get a gap up, then it comes back down to that level. So this little spot, let me just turn that green so you can see this. So where that green box is at, you can see that's been in between the 1.382, the 1618. That gives me some warm and fuzzies that this that this Fibonacci extension is actually in play, because it did react at the 1382, the 1618. And now it's gapping higher, right? You almost looks like you have an island gap up in here. So this thing's very concerning. Like this thing, I don't even know what it does. I can assume what it does, but I just don't know. I don't know this stock. I don't know anything about it. Just looking at it technically, I would be like, look, you got a winner. Just if you're in this thing, I don't know where you would have gotten in, but this thing's flying, and can you get that, 1150? If you can get that 1150, I would probably be like, okay, I probably need to take profits here and sit back and see if I can't get some kind of a pullback, and if it gets above there, there's a good chance it's going to come back and give you a retest. Again, we were talking about that. You buy something at 10, it goes to 20. It only comes back to 15. You have to be okay buying it at 15 and not have an ego that says, I'm only going to buy it less than 10 because I don't want to be wrong, right? I sold it at 10 and I'm only going to, I can't be wrong here, right? If I'm just not going to be wrong, right? The key is to say, look, I was wrong. I got out at 10, still made a profit. It went to 20. I was wrong. It's now back at 15. It's giving me an opportunity. I can't have an ego and say, I won't buy it unless it's going below 10. I can't do that. You know what I mean? The key is to say, okay, this is a good spot. I can manage the risk. 15, maybe it goes to 20, 25, right? And that's trading a trend. and that's what you have to do. All right, so that's what I would say about this United States antimony. This could be one of the ones, I don't know. This could be one of the ones that's getting potentially being talked about for a sovereign wealth fund. Who knows? I don't know. I mean, we've talked a little bit about that. This whole thing, picking winners and losers is pretty crazy. All right, so let me see if there's any more comments. Craig here. Okay, let's see, Geo Rich, if there's any traders. These are great lessons. Shine Bomb was meant to be funny. Boy, Trumpet, you've got good ones in here. I love it. All right, Frank. I remember Craig said a few times, buy two, sell one. Yeah, that is true. If you could, that's how you build a position. And the real key is to add to a winner, right? So again, that takes ego out, right? If you really think about this, when you can add to a winner, it's hard to do. Okay, it's going to be very hard to do. Typically, at least it is for me. Maybe it's not for, again, everyone has a different psychology. So maybe for some people that's a piece of cake. But when you have a winner, you want to add to that. Most tendencies are for greed and fear to overwhelm them, right? The fear of loss, right, is to add to losers, right? Something goes down and you want to be right, so you keep adding. It goes down some more, you add some more, right? It goes down some more, you add some more. And even if you're right and it comes back up, it's like the blackjack thing where you bet $2 and you double it to 4, then you double it to 8, then 16, 32, 64, 128. You can keep doing that, and odds are you're going to be right. But guess what? When you win, you're only going to win $2, right? So you don't win much, right? Your potential to win is very terrible. You're digging yourself a hole, because sometime you're going to get caught in one where it goes to 2,000, 4,000, 8,000, 16, and where's your end? Like look at gold. If you try to short that thing and you said this thing's going to come back when it was at 1,700, and you keep doubling down and doubling down and doubling down, pretty soon you're going to be at 100,000, 200,000, all to make $2, right? So again, it's these really crazy markets like that you're going to get stung. And so the key is that not have an ego, right, and be able to face fear, okay, and say, look, I need to buy this trend. I need to buy this pullback. Okay, so that's where we started the show is, are you, following a trend? This tech trend seems to continue going. And so is the dog continuing to wag the tail, or is the tail potentially wagging dog for a pullback? Why do I take the chance right here? Because we have this deep overvalued daily, weekly, monthly on the S&P, on the NASDAQ. Those are the two we had the harmonic structures in. And we're getting the deep overvalued. So, are we going to get a pullback in those? And what's going to happen with the Russell 2000? What's going to happen with the Dow? Those are the two wild cards on the outside. The Dow, the big stocks, capital flows. The Russell 2000, that's the small caps, that's the growth, the small to medium-sized companies. What's going to happen with those? And then we've got the NASDAQ and the S&P kind of nestled in the middle that had the harmonic structure that are now deeply overvalued. So a lot of things to think about there. Now what's on my mind, right? That's what I'm thinking about. And are we going to get some kind of a pullback in the stocks? And in the bond market, we're going to, next week, come back, take a look at this dollar. Again, this fits in with what we're talking about with Argentina, Japan, France, all these things going on around the world, maybe a shortage of dollars, okay? Because why? Because there's so much debt out there, there may not be enough, and it's levered, right? And this debt's levered, right? So, and we have unfunded liabilities. We have all these things out there that could create this rush for the door for dollars. And we get this dollar, and again, this currency is going to fail, right? The dollar is going to fail at some point, right? Whether it fails gracefully or it fails, bad, I just think it could fail on the upside. That's what rolls in another cryptocurrency. That's what they're not telling us. That's what Besant and Lutnick, and then that opens up another can of worms of, are these guys good or are they bad? You know what I mean? And so that goes back to the technocracy, and that story is to be continued. All right, so it's 9:30. Market's kicking off. We'll get in here, try to take some shorts in this S&P, see what happens. And with that, have a blessed weekend, everyone. Thanks for joining us. We'll be back to cover currency. I think currency will be interesting on Monday. I'll see if I can't get with Rachel and get some clips for us so we can kind of break this up a little bit. And because there's a lot of stuff going on. There's things I'm like, boy, I would love to show that clip. I would love to show that clip. So hopefully I can get that ironed out this weekend, and Rachel can help get me over the finish line on that. With that, everyone, have a blessed weekend. We'll see you Monday. Thanks.